Hey everyone, hello, welcome to the second edition of Economy, Markets and Macro. So those who are listening here for the first time, let me just quickly give you an overview of what this podcast is about. So this is a short podcast that I will be doing every Sunday. I will be going over anything that I'm reading, watching, or that just came across my whole feed or something like that about economy, markets, or macro. That's what I'm going to talk about. Anything that I find interesting in the last week, basically, that I've been reading or watching. I'm not going to discuss any specific stock charts, any strategy, or anything as such in this podcast. This is just a generic podcast that I have started. Hopefully, it is useful for you. If you like it, please do share, subscribe, and listen to it. And obviously, always give me feedback. So, there are around 5 to 6 topics that I will typically cover in this podcast, which goes for around 10 to 15 minutes at the most. If you don't, you can see the list of the topics that I'm talking about in the description. And if you want to, move ahead to any specific thing, you can just do that. It's your choice. You don't need to, listen all through it or whatever. But yeah, saying that, let's just start with it. So today there are a few interesting things that I have been, watching and really thinking about. So let's go through them one by one. So the first thing that I'm thinking about is this chart that I came across, which is the 2025 total returns for international stocks versus US stocks. So typically, US has been the outperformer for most of this last decade and more, like around 15-ish years. But this year, at least this 2025 calendar year returns look quite a bit different. So this is a chart that I came across, which is basically international stocks, which is all the international stocks, MSCI World Index, without the US stocks. So for the calendar year 2025, it has returned, the return is 15.9% in USD. And this is the US stocks, which is basically the S&P 500, and the return for those set of stocks is 2.1% in this calendar year, obviously in USD. So as you can see, international stocks have outperformed a lot this year. The question is whether this will continue or not. Now, I don't know for sure. So there are two ways to look at this. This is what is going on in my mind. So typically there have been decades where US outperforms for a decade, then international outperforms for another decade, and then again US outperforms. Not exactly like 10 years, but something between 8 to 12, 13 years. This cycle kind of repeats. It was broken down after 2008 market crash. It was one way outperformance for US for the last 16, 17, 18 years at least, and everybody's thinking that US will outperform uh, the whole world for rest of the uh, lifetimes or something like that. This year, however, as you can see, US is underperforming largely due to two things. So one is obviously the whole turmoil that has happened post the new president. So there's that, and also USD have been depreciating. The DXY index has been falling, so USD has been depreciating against other currencies. Other currencies have been gaining, mostly euro, and that is also adding to the performance. Now, the question is whether this will continue quite a while, or is this like a short-term thing that has happened? I don't know, to be very honest, but I doubt this will be a long-term thing because the amount of freedom in terms of businesses in US is much higher. Like the innovation capacity of US, the whole capital intensity that is available in US to fund those risky endeavors is all available in US. Like see most of the innovative companies today, like most of them are present in US. The entrepreneurial culture in the American society is always at the high time. Everyone is, thinking about things, how to innovate, etc. So like never bet against the American dream or never bet against America. That is something that I truly believe in, and I think that is something which is going to continue. I don't think US has, gone to the doldrums or it will stop innovating. I personally think this is like a short-term phenomena. And when I say short-term, it's not like 6, 8 months, maybe a couple of years, something like that. But I don't think US is going to underperform a lot. I think it might at least match the returns, or eventually it might outperform. This is just some temporary volatility, etc., with a combination of factors like tariffs, uncertainty, DXY, everything. But that's my thoughts basically. Let's see what actually happens. I don't know if I will be right or wrong, but let's see. Either way, I'm exposed to all those foreign international ETFs, so it doesn't really matter to me. But hopefully, US spirits continues, and that's what I expect. The next thing is when we dig deeper a little bit in this international outperformance this year, mostly the outperformance has been with Europe. As you can see in this chart, this is country by country returns of ETFs in 2025 in US dollars, obviously. And as you can see, the most of the top performing countries are in Europe. Even the Eurozone ETF has like 23% returns in this calendar year. Most of the other emerging countries or developed market countries haven't performed as much as great as European countries or the whole Europe in general. So, for example, as you can see here, India is at 2.4%, which is, obviously not as great as Eurozone ETF at 23.6%. So this outperformance of international has mainly come from Europe because Europe has been in dollar terms for the past 15 years. It definitely has some companies which have good return on equities or good dividend yields. They have more of a value purpose or, a value kind of nature. But it's interesting to see this. I don't have any views on this. It's just is what it is that I'm observing. But yeah, I mean, most of the outperformance this year has been through Europe. Now we don't know if this will continue for the rest of the decade or couple of years or 1 year or just it's going to fizzle it out. We don't really know the answer to that question, right? Uh, but let's see. I mean, Europe is coming back a little bit, to be honest. Their investment in defense capability has been improving. They're cognizant of AI. They're not doing many good things in AI at such yet. I haven't seen anything great, but they're at least cognizant of it. Hopefully, opening some bureaucracies around that, but we don't know for sure, right? So yeah, I mean, it's interesting to see that Europe is also going up, hopefully outperforming US this year, and we don't know if it will continue or not. But yeah, something that I'm really watching and very much interested in. And the third aspect of this is obviously the dollar index, as you can see. This also played a major part in Europe's outperformance this year. As you can see, this is a daily chart of DXY, which is the US dollar index. It made a all-time high in 2022 September, and then it has been, down a little bit up and, kind of a flattish range. But this year, from Jan, it is in one way down. It has broken its 2022 lows as well, like, just before 2022, the breakout lows, it has gone down below that. The recent lows in 23 also, it has broken down here. Now, the question is whether it will pull back from here up or is it going to go down straight? We don't know the answer to that question. And this is what probably going to decide the outperformance of US or not in the future a little bit. Obviously, this is one of the factors. So typically when DXY goes down, most of the emerging markets, most of the non-US markets and gold kind of outperforms because all the money is running away from DXY into bonds because interest rates are higher. So it goes into bonds, into other kind of risky markets like emerging and developed. Uh, Now, again, that is a question that we don't have an answer to, but it's really interesting to watch this, like what happens with DXI. This has implications for our Indian markets as well. Obviously, if this DXY keeps on falling, there is a very high probability that Indian markets might outperform. Although I doubt it a lot because we are already at higher valuations, so I don't know for sure. But really, it's interesting. Like the correlation between DXY and emerging markets slash European markets is very high. So if DXY keeps on falling, there is a very high chance that emerging and other developed markets than US might actually outperform US. So yeah, I mean, let's see what happens. And again, this is one of the important things that I always point out to anyone who talks me like we have a huge home country bias in India, so this is also a reason why it's very much necessary to have an international allocation. It can be only US like an S&P 500 kind of allocation or an all world country index or something like that. Whatever it is, we need it because for obvious reasons that we don't know which countries, like it's not just performance of companies, it also depends on a lot of macro factors, what is going on in the world, and a good diversification hedge that we can have. So it's really interesting. But yeah, this is what I'm watching. I'm going to keep a close eye on this to just understand. I don't think I will be making any allocation changes as such due to this, but this is something that I'm definitely watching. And very much correlated to this was the gold price. So everyone is bullish on gold, right? In the last 30, 40 uh, 30, 40 days, even a couple of years, kind of thing. So I wanted to just talk about gold here quickly. So these are two charts that I've found. So let's make it as 50 years. So this is a historical chart of gold price, obviously in USD. This is not an INR chart. This is a USD chart. And as you can see here, gold price, which made a high in 80s, broke that high in like 2008, uh, made another high in 2011, and it broke that high 2011 in 2023. So after 80, it took like, 30 years to break its previous all-time high, and then the 2011 high was broken in 2023. So another 12, 13 years kind of say. Now, because this gold is priced in USD, we don't feel it. We always see gold's price in INR. And because INR had a huge depreciation in the past 15 years, for us, gold price actually broke its all-time high much sooner. But it wasn't because of gold's inherent returns. It was mostly because of the USD appreciation slash INR depreciation that happened very drastically in the last, 15 years or so. So that kind of gave a big bump to our gold prices, and we think like gold is outperforming equities or matching equities, etc. But I would say that it's not real. If we see adjusted for inflation, like the high that it made in 1980, the inflation adjusted high was broken just now, like, October 2024. So that's like 50, 24 plus 20, like 40, 45 years it took to break its inflation adjusted high. So it's not really that simple. The gold's outperformance you have to see in USD. If I would have plotted an S&P 500 chart here, the gold outperformance wouldn't have looked so good for us, because S&P 500 on an inflation adjusted basis has broken its all-time high quite a few times in the past 40 years, and it is all-time high in its, like, it's not as bad as gold as it's shown in this chart. So for us, it's very important that we don't get attached to gold. It's better to be attached to international stocks and invest in them than being attached to gold. I know it has its diversification purposes, etc., but it's really important that we don't go overboard and, allocate a lot to gold ETFs. It's really not an asset which will give you inflation adjusted returns uh, on every ruling period or such. It sometimes takes a lot of time, to go through and break its inflation adjusted performance. I know we only see in INR, so I understand the bias, but it's also important to look at other producing assets, cash flow assets like stocks, like international stocks. And this is the reason, like we already have a lot of allocation to gold through, jewelry and stuff. We never count it, but we do have it, right? But we really have almost zero allocation to international equity. India is one of the biggest home country buyers where we don't invest in international stocks. So I think it's better personally to invest, in international stocks that provide so much better inflation adjusted performance than gold in itself. Just something to think about. This is not an advice or something, but just something that we should think about a little bit more carefully, and not just, go through the recent outperformance of gold that we are seeing. Another thing that I came across my view is this crude oil thing. Rug pull on crude oil is what I call it. Obviously, so crude oil shot up in May and early June with the whole uncertainty around in Middle East, India as well, and a lot of other things that were going on. It kind of went from 60 to almost 80. It didn't touch 80 if I'm correct, but it almost went to 80. And as things cooled down in the past few weeks, in the past few days, to be honest, not even weeks, it kind of went from 76 to 64. So it was kind of a one-way rug pull, like it just crashed like anything. So again, something around macro geopolitics, which we don't understand, like everyone would have thought with the way things were going, crude will stay higher for a longer time, but it seems like it didn't. It was kind of a rug pull, right? So, I mean, it is what it is, but something that we have to understand, and that investing and geopolitics and macro don't really collude a lot. Like as an individual retail investor, it's better to ignore geopolitical things or macro things while investing. I mean, don't base your investing decisions on any geopolitical or macro things is what I would say. Keep it at personal allocation, whatever your goals are, etc. Everyone were making decisions around this whole crude oil thing I have seen myself. I haven't done it, but I've seen people done it. So it's really important to take this interview. Like we don't know when a rug pull on commodities can happen. The macro view, so to say, on commodities doesn't really, help us to take a view on any investing decisions, so to say. But yeah, something interesting that I was watching. Now we don't know. It might again go to 80. It might go down to 60, 50s. We really don't know the answer to that. But yeah, something that we have to watch around, and something this chart which came around, my view, my feed a couple of times, and it was really interesting to see this. That's mostly about markets. I think a couple of news articles that I've been reading is this. So this is not confirmed. This is a rumor as far as I know. But it seems like Apple is interested in buying Perplexity. Again, this is a rumor from this Reuters article. I don't think this is a done deal or out in the open. It's confidential if it is even true. We don't know the answer to that. But it's really interesting because most of the top tech stocks, so to say, called as FANG, or the whole top seven mega cap seven stocks like Meta, Amazon, Alphabet, Nvidia, and all those things, all those companies have really invested in AI a lot. We can see through those models coming out, the whole AI integration in all sorts of things, hiring of AI people, etc. But one company that has been really lagging in AI is Apple. I personally use Apple products, and it was really lagging. If this deal goes through, obviously this is going to be a huge thing for Apple. Again, this is not about buying the Perplexity as a product. I don't think that's what is important here. The important thing here is buying that AI talent. Uh, so maybe Apple is not able to hire AI talent such that it can integrate it in a way that is useful to its consumers. So maybe buying Perplexity is not about that product, that search product in itself, but more about buying that AI talent and using that, getting access to that talent to actually gain an upper hand in this whole AI wave that is going on. I personally believe AI is going to be a really, really big thing in future. I think it's what's gonna, increase our productivity in future. Our productivity growth has been stagnant for the past 3 decades, I think. So I think AI is the next machine after huge industrial revolution and world war that is going to help us. AI is the machine that is going to help us in the next leg of productivity growth. I personally believe so. I don't know, but yeah, it's really interesting if this is true that Apple is also interest like making some waves in AI stuff. Let's see what actually happens. Another thing that came in my news feed is this, where Career Builder plus Monster, the company, has filed for bankruptcy now. I think almost everyone in India who is at least my age, like, 30 plus, 32, 33, has heard about Monster, has probably used Monster sometime in their life. I have used it myself very initially to, just scan for jobs or something. It's very, very interesting to see that this has filed for bankruptcy. There is no view as such, just something that I came across, and it was really interesting to read through this. I mean, with the whole productivity gains, AI gains, and maybe they were just not able to make it. But yeah, I mean, one of the biggest job search platforms has filed for bankruptcy, so it's very, very interesting. The next thing that I came across is this. This is a India specific news, which is, credit card spending rises 15% year on year in May, driven by travel and e-commerce. Again, this is another aspect that I'm seeing, so to say, formalization of our economy, maybe debt linked formalization. So credit card is typically debt, right? You take a debt with zero interest for 55 days. If you pay it back in full, you pay no interest, you are good. But if switch to EMIs or make minimum balance payments, that's where you have to pay a huge interest on credit cards. But it's really interesting to see that Indians have now started, accepting credit cards a lot more. Obviously, this uh, I mean, the about the whole pie, it's still very less, like in percentage terms of the whole population. But it is really interesting. As we, I have seen that a lot of Indians have started traveling international a lot more. Anecdotally, I have traveled international a lot more. I've seen my friends travel international a lot more, maybe 1 or 2 trips a year at least. And it's really, really interesting to see that happening, the change happening. And as you go to international, obviously the option for you to for payment is mostly credit cards. You cannot carry this big pile of cash, or you cannot use debit cards as much. Credit card is where you have to spend all your swipes transactions in international. So I think this has long way to go in India at least. I think issuance and spending on credit cards is just going to rise. It's easy access to loans, small amount of loans that you can get through, minimum balance payments, etc. Obviously, it's at a very high interest rate, which I don't think is a good thing, but it is what it is, right? So I think the whole credit card thing is gonna just go more and more. Like there is a lot of way to go for this. And travel is not the only thing. I think e-commerce also has now imbibed in almost all of our daily lives. Like we Swiggy, Instamart, Blinkit, Zepto, Big Basket. Like every one of them accepts credit cards. We shop online a lot, with for ordering clothes or small grocery items, chocolates or anything. Like I almost order anything online now. So it's really interesting to see how this pans out. But I think like this I'm not making any investing decisions, but I think this is just going to go a long way ahead, I think. The next thing, one of the biggest things that I've seen is, US Congress passes the stablecoin bill. I think this is really great for the crypto industry. So to say, I was really interested in this and I read a few articles around this and just wanted to talk about it a bit. So let me just explain this in a couple of minutes here. So basically what this means is that now stable coins have become legal, right, with this stablecoin bill. What they means is stable coins are basically digital dollars, right? So you can have dollars like notes in your hand, or you have some money in your bank, etc. But now stable coins are going to be also be equal to digital dollars. So stable coins are basically cryptocurrencies that are supposed to be worth dollar one each. So one stable coin is equal to $1 each. The law says that these stable coins are can be made by the companies, but they must keep real dollars, in the bank to back them up. So, for example, if I have 100 stable coins, as a company, I issued 100 stable coins, I have to back it up with $100 worth of those stable coins. Now that can be through, uh, actual $100 in cash in your bank account, or it can be treasuries or anything equivalent to dollars like US government bonds or something like that. It's up to you as a company what you want to back it up, what kind of thing you want to back it up with, but it needs to be real dollars. Like one stable coin should be equal to $1. Uh, so what is the use case here, right? So if you think like, if this is something equal to $1, why can't I just keep dollars in my bank account and transfer it to uh, other people if I need, etc. So so the use cases are very different, right? So it's really hard for anyone from outside US to open a US bank account, right? And to keep dollars in that. Or if a US company is paying to a company in India, or a developer in India, or some person in India, now to make that transfer through a bank to bank transfer, it is very much expensive to do that. It's also very tedious. There is a lot of legal process involved, etc. Now, what you can do is US that company can just pay you via stable coins through the whole through not Bitcoin, through the whole cryptocurrency network, the blockchain. You can use Tether or some other network like Circles network or something else that comes up tomorrow, and pay through stable coins as a company to an Indian employee or something like that. It's going to be an instant transaction validated on the blockchain, and you're good to go, right? So it really, uh, I mean, it really is interesting to see how this develops, but I think this is going to be a huge thing. And yeah, I mean, it is what it is, but I think this has really good effects in, cross-border transactions, and the whole debate around whether dollar is going to survive or future is going to be put to rest. Because if people start paying through stable coins, they have to back it up with dollars, and if you're going to back it up with dollars, it kind of becomes, default, so to say, reserve currency of the world. It is right now, and it just stamps in its position. I think it's interesting. I think it has a lot of use case in cross-border transactions, not much in internal US transfers, but mostly in cross-border transactions. I think stablecoins are gonna play a lot of role. You can create a lot of startups around that. You can lend money across internationally in USD, which is very difficult, right? Like right now, if you want to, take a loan in USD, it's very difficult. But with a stable coin, I think it's going to be possible very much soon. Getting payments easily over a blockchain network without, paying any fees or transaction costs. That's going to be really great. And eventually you can, transfer these stable coins into other Bitcoin cryptocurrencies. I think that will soon come up with different networks coming. So yeah, it's really interesting. I'm very, very much looking forward to this in terms of like how it, what kind of innovations we can create around this. So yeah, I mean, this was pretty much it that I was reading around, talking, and exploring around, and some good things that came into my feed, so to say. So it's thank you for listening to this. You can always reach out to me on my email, viraj@momoindustry.in. I'm not on any social media, but I'm on Substack, so you can subscribe to me on Substack. I will post the link to my Substack down in the description. Do give me a like, subscribe, and share if you really like these videos.